Good to be back with you once again on the India Development Debate right here on ET Now. We're going to put the spotlight on what we're calling it the saffron agenda for the central bank ahead of the crucial board meeting come Monday. Government nominee on the RBI board, S Gurumurthy, has blamed it all on the FRBM Act for the current liquidity crisis in the system. Gurumurthy, who is also the convener of the Swadeshi Jagran Manch, says that the 2002 legislation has crippled the government's ability to print currency as and when it is needed. He also ridicules the supporters of weaker rupee, stating that a fall in currency value needn't always lead to higher exports. While seeking an immediate review of the FRBM Act, Gurumurthy says that the government needs to have a say in liquidity management, even as it takes immediate steps to address the concerns of small industry, which forms the heart of India's economy. Very, very scathing observations there, and the question really is, has he drawn battle lines further instead of diffusing tension ahead of the RBI board meeting? To put the spotlight on all of that and more, let's actually first listen into S Gurumurthy before I go across to a stellar panel that's joining us right here to analyze his comments further.
There is liquidity problem. Can the government of India say, I will give you 100,000 crores worth of government securities. You give me the cash. The government of India cannot do it because it has passed a law giving up that power. We have given up the right to print our own currency, you know it, in the year 2002 by a law called the FRBM law. So India banks are the lifeline. But the Indian policy making on the bank is based on the American model, in which stock market is the prime mover, bank is the subordinate player. You know, there are certain norms prescribed for banks, that you must have so much capital. But the Basel institution, which created this model, laid down rules that for commercial banks only what we say will apply. In India, for both, it is 9%. I don't know where this 9% was got up by the regulator. With the result, we are doing more than what the Basel wants. And so the banks have less money to lend. And what India lacks today is credit for MSME sector. A new thinking is needed, an India-centric thinking is needed.
Okay, let me take this across to a panel that's joining me right here, and I'm going to be joined by Ashwin Mahajan, National Co-Convener of the Swadeshi Jagran Manch, Mohan Guruswamy, Visiting Professor at the Administrative Staff College of India and a noted economist. Of course, Maithili Busnurmat, a noted economist herself and a consulting editor at ET Now, joins us. And we'll be very shortly be joined by Arvind Virmani as well in a bit from now. But okay, let me just take this across to this panel. And Maithili, if I may begin with you. Mr. Gurumurthy has, as a board member, has made these comments. Yes, he's on the RBI board, but he's also a known saffron ideologue. How seriously should his remarks be taken? And is it appropriate for a board member to voice his opinion on key policy issues 3 days before that crucial, all-important RBI board meeting?
Well, Supriya, Mr. Gurumurthy and controversy are not strangers to each other. Almost everything that Mr. Gurumurthy says becomes controversial, partly of course because he has a very strong political affiliations, and that arouses a lot of usually ire amongst a lot of people. But the timing of what he said is particularly unfortunate, given that the meeting is going to be held on Monday, and both sides are not really, you know, on the, clearly the mildest way of putting it is not on the best of terms. I mean, there are very strong differences of opinion on issues that do affect the country. So the timing, I think, is particularly unfortunate. On whether a central board member should express his views, I think there would be no objection, but for the timing. Given this particular timing, that's just 2 days away, and there are lots of issues which are bones of contention, as it were, between the government and the RBI, the timing is particularly unfortunate. And also in Mr. Gurumurthy's case, a lot of what he says, there is a grain of truth, but only a grain of truth, and it's not entirely the full correct picture that he gives. So it could distort opinion, and that I think is also very unfortunate.
No, fair point indeed. But let me take this across to Mr. Mahajan. You know, sir, with these comments, has Mr. Gurumurthy drawn battle lines even deeper and further before the RBI board meeting? I mean, one expected that some tension was going to be diffused. It looks like that truce was temporary. Should one expect fireworks on the 19th?
I don't think so. Supriya, actually what Gurumurthy has said is the pure truth, and what he has talked about the Basel norms. First of all, we are going beyond the Basel norms, and nowhere in the world Basel norms are implemented for on the central bank, and in India it's a special case. Nowhere in the world the central banks have got so much of reserves. It is special in India. So if the banks are fighting with the liquidity problem, so if Gurumurthy has said the correct remedy for the same, what is, I don't see any reason that there will be more of fight. In fact, I think what Gurumurthy has said, it would set the tone of the meeting. Yeah.
I don't know if it's going to set the tone of the meeting, but it has certainly, raised concerns how bad this could be. But let me take this across to Mr. Mohan Guruswamy. And Mr. Guruswamy, Mr. Gurumurthy's stress on new thinking being rooted to the ground, some of the specific points that I will discuss through the course of the show, which is liquidity and PCA and MSME and Basel norms and all of that, I will come to. But these are largely going to be interpreted as the push towards Swadeshi-nomics and the Swadeshi-karan of the RBI both, so to say. It is no secret that Mr. Gurumurthy has close associations with the Ideological RSS. It has links with the Swadeshi Jagran Manch, which was instrumental perhaps in the ouster of Nachiket More. Or do you believe there is some amount of merit that lies in his arguments? There are people who support what he's saying.
You see, this has nothing to do with Swadeshi. Swadeshi has to do with indigenization, Make in India and all that. It relates to industrial policy, not to monetary policy. This is really wacko economics, and to call it Swadeshi economics is also wrong. It's really voodoo economics. The man is saying that, the government can print as much money as it wants and distribute it around. What will happen to M1 then? What will happen to inflation then? He is only concerned with the NBFCs getting more liquidity so that they can start functioning and retiring their debts and all that stuff. Now, I know he has a long vested interest in NBFCs and a long association with it because I've known him from before. And he thinks that the solutions are very simple. NBFCs are refloated with huge injections of cash from banks, which are already in bad shape, then everything will go away. That's not how the economy works. And that's not how an RBI governor has to behave. There's an element of discretion there, because what the RBI says will roil the markets. And, he's making statements ahead. He's trying to set the agenda for the RBI. Single whatever school of economics he represents, sitting on the RBI board, he's trying to browbeat everybody.
Mr. Guruswamy, give me a minute. Okay, Mr. Guruswamy, give me a minute. I want to go across to Maithili. And Maithili, before we go any further, there are sources who tell us that, and there is some amount of discussion that has happened on this, that the government may want a set of regulations for closer supervision of the RBI's functioning, a new set of regulations that may perhaps make the RBI board-managed institution. Is it suicidal to even think in that direction after you've mandated the RBI to do price management, currency management, forex and all of that, to now talk about making RBI a board-managed institution?
Supriya, as far as RBI's main responsibility of monetary policy is concerned, that we already have an MPC. But the RBI is a full-service central bank, so it has a number of other responsibilities, including that of supervision, merchant banker to the government, developmental obligations, etc. Now, these are all entrusted actually to the central board of the RBI. In the past and traditionally, the central board has been playing largely an advisory role, and they never really interfered or gave any directions to the governor, and the RBI professional management ran the bank as they deemed fit. Now, I think with the appointment of these two new board members, particularly Mr. Gurumurthy, there is an attempt to become a little bit more vocal within the central board, and that I am not sure is necessarily a good thing. Yes, it is important to have discussions in the central board and have it less of a very passive board. In the past it was a fairly passive board. So I think it's important to have discussions, but it will be very dangerous if these discussions go beyond that and impinge in any way in the operational autonomy of the Reserve Bank of India. Let's be very clear that the Reserve Bank is independent only as far as monetary policy is concerned. In all other matters, it has operational autonomy. It is not independent. But that is a very thin line, and it would be very dangerous if the central board interfered in the operational autonomy of the central bank.
Okay, Mr. Mahajan, if I may come to you, I know Mr. S Gurumurthy asserts that liquidity wouldn't have been an issue if government could print currency like it did up until 2002, and which is why he's asking a review. Any political establishment would love the sound of that argument. Who wouldn't want to print currency to tide over any troubles? But how does this suggestion sit with RBI's mandate of managing inflation? It actually reduces that whole mandate to a joke.
Before I answer this question of yours, I would like to comment on the kind of things which are being talked about regarding the autonomy and the active Reserve Bank board. You know, this board is under the Constitution, and if in the past the board had not been functioning and it was like a rubber stamp, it was not a good thing. After all, you have board members, those who understand, and let me tell you that monetary policy and the fiscal policy go hand in hand with each other. And if an institution says, yes, we are concerned only with the monetary policy and we are not concerned what is happening elsewhere, no, it is not good, and that's the reason why the board is there. And saying that since board is acting, actively taking decisions, or it is being treated as an interference. No. Yeah, I will come to your point. But the argument, that autonomy of the RBI is being disturbed, it is wrong argument, because autonomy is within the framework of the Constitution, and the autonomy is about the implementation of the decisions taken by the board, which includes.
And I've asked you a liquidity question, sir.
Yeah, and there. So let me. I was.
Okay.
Answer
my question on liquidity. I have to move forward quickly, sir.
And you see, again. Yeah. So this liquidity issue again is a fiscal issue. When Gurumurthy was talking about the FRBM Act, it is a fiscal issue, and since we have given up this right of printing more currency notes and having higher fiscal deficit, that's the reason why it is all the more important that RBI provides the liquidity to the system where we are lacking. So it is the liquidity issue is linked with the fiscal policy.
Okay, I'm not impressed with that answer, and while you're right in saying that the RBI board and all of that, the RBI board is not made up of specialists. The specialists on the board are the governor and the deputy governors and all of that, and which is why I think Raghuram Rajan rightly said that the board needs to be Rahul Dravid and not Sidhu, which is just perhaps trying to be. But let me take the liquidity point forward. You believe he said the right thing, that the government should be printing currency and it would take care of the liquidity situation. Arvind Virmani is joining us also. And Dr. Virmani, I don't want to take a side on this, but I kind of disagree with that statement. But having said that, there are those who find some merit. In England, Japan and China, for instance, it's the central bank that prints notes. But in the US, it's the Treasury that does so, but the Fed Reserve controls the supply. Do you believe the liquidity debate warrants a review of who prints currency and who manages it in India?
See, the current one has to be a little more precise. Before the global financial crisis, the whole issue of control of currency was tied in with the issue of inflation and monetary management. In that sense, the control of currency and the expansion of money supply was given to the central banks, whether it's RBI or anybody else, they have had the authority to determine that amount of money in circulation, whether through repo rates or through direct injection of currency. Now, since the global financial crisis, the definition, these two issues have got a little separated, and in India we have already defined an MPC which has control over the inflation, and therefore without having any control of money in the sense of whether it's repo or the amount of money, total money. Remember with in the old days, M1, M2, M3, we used to look at all these things while discussing a monetary policy. Now those have, for a country like India, those have not disappeared. In the US and other advanced economies, they just talk about repo rates or their equivalent, Fed funds rate, etc. They don't bother about this M1, M2, M3. But I don't think that's possible in India because we don't have a completely liquid and integrated market. That is one issue. But the second issue of liquidity now post GFC has to do with contagion and the spread of contagion in the sense of the whole stability of the financial system.
Right, Dr. Virmani, let me jump to the other. Dr. Virmani, please bear with me. I have very little time and lots of topics to check. I want to go to PCA, and Maithili, I know you have a very strong view on this, that are we overdoing Basel norms or not, and I will come to you and talk to you about that in just a bit. But Mr. Mohan Guruswamy, S Gurumurthy says that in places like, there are other places like Japan where the capital norm is 8% for banks that have foreign exposure. For domestic banks, it's 4%, whereas we in India have 9% for both. Why are we overdoing Basel norms? Does this argument cut ice with you, or do you believe that it gets neutralized because there are some Basel norms where we are very stringent and some where we are far more relaxed than Basel norms themselves? Mr. Guruswamy.
What the RBI is doing is correct. It's balancing things to our requirements and to our needs. And we just can't break up from the past. We had a certain trend in policy in the RBI, and we should continue with that. The Reserve Bank is just not any other government department where you can keep reversing policies and jerking it around. It's managing the complete monetary system, so to say, and that is very delicate. First of all, you must have a lot of confidence in the bank, and the bank's people's confidence in the bank was also shaken by demonetization. Because after all, that 500 rupee note which you can't cash was promised by the RBI governor, not by the government of India. So I think you've got to be very careful with it. You can't allow a public spat like we're seeing now. And what Mr. Gurumurthy is doing is bringing in his peculiar, particular kind of thinking on fiscal management and push it down the RBI. And he's seen as a man who speaks with the Prime Minister, with the government, close to the government. And so, you come with a public statement and lay the grounds. You're actually trying to write the agenda for the RBI. And the rest of many of the directors are, people who would not like to take on the government directly. Because they're industrialists, there are all kinds of other commitments. And, you can't, just do this and get the professionals in the RBI, the governor, the deputy governors, all on board by browbeating them and beating them down. And that is what I object to.
Public spat is good for the central bank and the government. But Maithili, let me come to you. Okay. No, I agree with you. I don't think any public spat is good for the central government and the central bank. But Maithili, on this PCA bit, I know you have a very strong view on that. But the RBI that was blamed for looking the other way when NPAs mounted cannot now be asked to look the other way once again when we are in the middle of the NPA cleanup, to now say that, you should relax norms for banks under PCA, because it amounts to making the RBI look the other way all over again.
Well, yes, there is a case for caution, but it's always important to remember that the remedy should not be worse than the disease. So if in the process of your PCA, the bank's credit is going to dry up so dramatically that the credit to the economy is totally insufficient for the growing needs of the economy, then perhaps the RBI needs to rethink. And even the Basel norms, the Bank for International Settlements, they themselves in their report have said that India's norms are higher than international norms and they're stricter than in many countries. So is there a case, I think one needs to examine the case, that is there a case for bringing us, down, quote unquote, to international levels, particularly when the economy is not doing too well. Remember, good policy is always counter-cyclical, and though one is not arguing for relaxation of norms completely, but also to just keep in mind that when the economy is not doing well, when there is a dearth of credit, and when we've gone through two twin shocks, monetization and GST, GST of course was desirable, but it was a shock, then in that case should we just ensure compliance only with international norms, or can we think of a system whereby only those banks which have international exposure, as in the case of Japan, they are required to comply with Basel norms. Other banks, particularly because they're mostly public sector banks, have slightly lower norms. I think these are issues which need to be debated and discussed, and perhaps the central board is the best mode, this medium whereby this can be done.
Fair point. A quick last word, and Dr. Virmani will let you have that. Come Monday, there will be a board meeting at the RBI, perhaps the most watched board meeting of the central bank. The board extremely divided, with people like Mr. Gurumurthy expected to raise the tempo and the temperature there. But, in a conversation with us, Raghuram Rajan said that the board needs to play like Rahul Dravid and not noisy like Sidhu. What should the board's job be? To push the agenda, to diffuse tension, to corner the governor? I mean, this meeting is happening amidst speculation that the governor may actually put in his papers.
I think it's perfectly legitimate for any board, including that of the RBI, to raise and discuss any issue which comes to the attention of the board and its members. So I don't see any problem about discussing any issue relevant to the whole issue of macro and monetary management. But I agree with many others. I think many people have said before that normally I don't think it is a good idea to do these in public, because in public it always becomes two things. One, it's either an ideological versus political debate or vice versa, and two, it becomes a matter of personalities and personalities fighting with each other. That is a terrible way to sort things out. But as I said, to just conclude, as you said briefly, I think it's a good idea to discuss all these issues on the board, not come to any hasty conclusions and immediate actions, and perhaps discuss them several times, and also bring in professional input from neutral professional input into the process.
No, fair point indeed. Bring in neutral professional input. Do not fight in public. You are the central bank, and guess what? You are the elected central government. Try and bring peace. That's all that we will tell our policymakers there. But thank you very much, Maithili Busturwat, Mr. Mohan Guruswamy, Mr. Mahajan, and of course Dr. Virmani. Thank you very much for sparing time out speaking to us this evening. The RBI board meeting will be done on Monday. This is a board meeting that comes amidst a huge war as far as the turf is concerned between the RBI and the government. We do hope temperatures will fall, and we do hope that the RBI and government can see eye to eye. Invoking Section 7 or board members talking publicly against the RBI are never good as far as policy making is concerned. The RBI's job is to do monetary management. Its mandate is to manage inflation. And so guess what? The government can't be printing currency, even if Mr. Gurumurthy would want to. Thank you very much for being with us on this edition of the India Development.